Hello investors, traders, and cryptocurrency enthusiasts. Welcome to our channel, where we bring you the most relevant news, in-depth analysis, and real predictions about the world of digital currencies. Today we are going to talk about one of the hottest topics in the crypto market over the past few weeks, the technical crossroads. Faced by three of the most popular memecoins, Dogecoin, Shiba Inu, and Pepe. According to a detailed analysis conducted by expert Vishal Dixit, these assets are currently at critical levels that could define their next price movements in the coming days. After a week marked by strong gains, mainly driven by volatility and the typical speculative sentiment surrounding memecoins, all three tokens have entered a delicate decision phase. On Monday, following a promising Sunday, all of them recorded small declines, with sellers starting to pressure buyers who were trying to break through key resistance levels on the daily chart. This behavior reflects the uncertainty among traders and may indicate either a continuation of the positive trend or a reversal downward, depending on how each asset reacts to these key levels. Starting with the analysis of Dogecoin, arguably the best-known memecoin in the world. Thanks to its popularization by public figures like Elon Musk, last week Doge rose around 12%. But on Monday, it once again met strong resistance near the 17-cent zone, level that had previously acted as a barrier on June 19th. However, not all is lost for the bulls. The MACD recently showed a bullish crossover. Additionally, the RSI is hovering around 44, indicating that selling pressure is gradually decreasing. As Vishal Dixit explains, if Doge manages to close above 17 cents with significant volume, the price dropped about 1% at the start of the new week, temporarily halting the wave of optimism, signaling a possible trend reversal, but showed signs of fatigue right at the start of the new week, with a 2% drop on Monday. On the flip side, should it fail to surpass this level, the token managed to break a descending trend line formed by the highs of May and June, which could represent a meaningful technical shift. There's room for a new run toward the psychological level of 20 cents, which would surely excite the coin's community even more. The risk increases of a deeper pullback toward the previous support of 14 cents, recorded on June 22nd, potentially testing investor confidence along the way. Therefore, traders should remain alert to any abrupt changes in price dynamics. It's worth remembering that SHIB has shown very rapid cycles of appreciation and decline. However, on Monday, the movement lost strength and the price dropped about 2%, clearly showing that bulls are struggling to overcome an important resistance formed by the peaks of May 23rd and June 10th. Meanwhile, Shiba Inu also saw a rise last week, gaining approximately 12% after an impressive surge early in the year. The token caught attention again in recent days. This suggests that bulls have lost some momentum in their attempt to break the important resistance level of $0.001200, which coincided with the closing price from June 5th. Nonetheless, there are reasons for optimism within the technical analysis. The ACT recently activated a bullish crossover while the RSI sits at 46, approaching the neutral line of 50, which indicates that bears are losing strength. With global financial markets reacting to expectations of interest rate cuts by the Federal Reserve and persistent inflation, if SHIB holds above this line and successfully closes above the mentioned resistance, its next target would be the 50-day exponential moving average, currently located at $0.001252. Moreover, the proximity to the launch of new staking ETFs such as the Solana SSK fund may indirectly help heat up interest in smaller projects, including memecoins. Riskier assets, such as cryptocurrencies, tend to suffer from sudden shifts in institutional investor risk appetite, while Doge, SHIB, and Pepe continue to sit at technical decision points. Stay tuned here on the channel for the latest updates and exclusive crypto market analyses. However, precisely because of their speculative nature, otherwise a new correction towards the $0.001000 zone remains a viable scenario, making it highly sensitive to shifts in market sentiment and external events such as broader altcoin trends or social media posts from influencers. The third protagonist in this analysis is Pepe, which emerged as a true sensation in the Memecoin universe in 2023. rising 8.9% on Sunday and 17% over the past week. Despite this momentary correction, there are positive signals coming from technical indicators. According to Vishal Dixit, if Pepe can break this critical resistance with consistent volume, it could target the level of $0.00001196, a new high since the beginning of the month. However, should it fail in this attempt, the path might reverse, potentially leading to a drop towards $0.000900, a level already tested before and possibly serving as emerging support. Just like its peers, Pepe operates in a highly speculative environment, where narrative and hype are as important as technical fundamentals, requiring extra caution from short-term traders. At the same time, the global macroeconomic landscape plays a crucial role in shaping the trajectory of these memecoins. Capital flows between asset classes have been volatile. Memecoins often benefit from periods of increased confidence and liquidity in the market, which partly explains the recent movement. Finally, it's essential to highlight that, although memecoins offer interesting trading opportunities, they also carry high risks due to the lack of real utility and heavy dependence on sentiment and narratives. Investors should maintain strict risk management discipline, always respecting clear stop-loss and position limits. The behavior of the upcoming candlesticks will be fundamental in identifying whether we're facing a simple pause in the rally or a complete trend reversal.